what is going on in the market right now? If you find yourself asking that question, frequently, you're not alone. And I'm not even just talking about the real estate market, although that's obviously the focus here. I'm Mike, by the way. This is Mondays with Mike. And it's been a little while since we've brought you a market update. There's more affecting the market right now than just who's thinking about moving and what neighborhoods are hot. There are a lot of macro factors that I think need to be kept in mind. So just going to give you a quick update, and we're monitoring what's going on. And I don't want to say I'm going to make a prediction about what's going to happen, but we're always trying to figure out what to prepare for. So I'm just gonna put out there a few of the things that I think are going to affect the market as we head further into the fall. So August, we actually saw home prices dip for the first time in quite a while. There was a record set earlier in the summer, June, July in Nassau. We had a new record for median sale price. We're actually down 20,000 with the August numbers. So still pretty high. I mean, we're down 20,000, but 700,000 was the median sale price for Nassau County in August. It's still 4.5% over where it was a year ago, and that's still a pretty high median number. I remember for the longest time we were in the fives and low sixes for that median. Suffolk was 565,000. That's 10,000 under the record that was set in July. They're up 6.6% year over year. So the numbers are still strong, and that's kind of the idea. We still don't have a lot of inventory. So we still have declining sales. Each month we're seeing less and less coming on the market. So we still have a supply-driven seller's market, if you will, in a lot of places. The problem, of course, and I'm not like a genius for saying this, but rates have made it less affordable. So we're still having this push and pull between supply and rates that's been like the narrative for the better part of the spring and summer, and it's going to continue to, the plot will thicken as we end the year and go into the fourth quarter. So just yesterday, we saw the average rate on the 30-year mortgage go above 6%. That's the average rate. So we saw a few people seeing over sixes the past couple of months. Now the average is above 6. It's the first time in 14 years we've seen it. It was like the depths of the financial crisis when we last saw that. Up 2.9%. The annual rate is up 2.9% from where it was a year ago. So not the first time we've talked about how the cost of money has gone up, but just want to highlight by how much. Now, what's going to happen next? I mean, there's no surprise that rates have been going up because we've had inflation that's been ticking up and up. The Fed meets next week. This is, by the way, this is a Mondays with Mike on a Friday because I want to get this out there ahead of next week. We might have another update sooner rather than later. But inflation was a little over 7% annually. That's what came out this week from the economic data. Employment still seems like it's pretty strong, but we're going back to like 1991 to find inflation at this level. And now what I've come to do is I'm like a Wall Street watcher now, and the investment bankers and traders that bet essentially on what the Fed is going to do at their next meeting. There's now a 33% chance, according to those betting lines, if you will, those Wall Street betting lines, that the Fed is going to raise the interest rate, the federal funds rate, by a full 1%. And that's going to be the first time since 1984 if they do that. So we've talked about this before, the Fed doesn't exactly control mortgage rates, but what they do with their market operations and when they manipulate bank rates certainly affects it, and some of it is baked into the cake already. But if they go a full point as opposed to 3/4 of a point, which was just the general expectation, we may see rates spike up even more because the market hates a surprise. So anyway, kind of more of the same. There's nothing to panic about. I don't expect to have a wild sell-off in Long Island real estate. In fact, I think we could do with a little bit more supply. So if anything, I think that things will balance out. If we get more people selling, it's a great way to liquidate and get some cash on hand. If you're looking to downsize, get cash in hand. Not the best time to refinance, maybe, but to actually liquidate and get that money and have it available. Great time to probably have it in savings or a CD or something where you can earn a high rate of interest that you haven't had in the past. So, not giving general financial advice. I'm just saying it's all connected. It's all connected, and nothing to panic about. Just interesting to see bigger changes in the market. That's, we've had the same story for a few years. It's never that much supply on Long Island and in the greater New York area. But we're starting to see some new factors come in, and I think we're going to see a change as we go into winter, hoping for a more balanced market. Anyway, I've sort of run out of things to say, and I'm saying the same thing over and over again, so I'll quit while I'm ahead. Hope everybody has a great weekend, and we'll try to bring you more of these as we get breaking news. Not always easy to do, but always happy to talk offline with anybody. If you're seeing this on social media, please DM us, give us your thoughts, your questions. If you're getting this by email, you probably have my cell number, but if not, you can email us back. Everybody take care, and we'll talk soon.